Look, everyone is distracted by the holiday lights and the end-of-year rush, but if you look at the footnotes of the emergency filing that just hit the federal court in Oregon, the real fireworks are starting. We are exactly 9 days away from a total blackout, and I'm not talking about a standard government shutdown. We've seen those. They're theater. This is a deliberate surgical execution of the only agency that actually keeps the banks from picking your pocket while you're at work. You feel it, right? That weird vibrating tension in the air? It's the sound of the guardrails being ripped out of the floor. I've been digging through the specific numbers in this 22-state lawsuit for 6 hours, and the mainstream narrative is completely missing the how. They're calling it a funding dispute. It's not a dispute. It's a ruse. Russell Vought, the guy currently holding the keys, isn't even trying to win a policy debate anymore. He's just stopped the heart of the CFPB by refusing to sign a single piece of paper. He's claiming the Federal Reserve has no earnings to give them because the Fed is technically running at a loss. It's a pencils down order for the entire national consumer protection system. Think about the timing. In 9 days, the National Complaint Database, the thing that handles tens of thousands of reports on everything from identity theft to mortgage fraud, goes dark. If a debt collector starts harassing your family next week or your bank loses your mortgage payment, there will be no one to call. The phone will just ring in an empty building. Letitia James and Bonta aren't filing these emergency suits because they like the paperwork. They are panicking because they know they can't handle the tidal wave of fraud that's about to explode once the watchdog is starved into silence.
We're talking about $13 trillion in the mortgage market alone. $13 trillion. And the person meant to oversee it just walked out of the room and locked the door from the outside. They think we're too busy with the holidays to notice the shield is being lowered. They think we're stupid enough to believe this is just accounting. But you see the pattern, don't you? The states see it, the markets see it, and if the court doesn't drop a hammer in the next 48 hours, the scammers are going to have the best New Year in American history. And the man behind the curtain, he's already moved on to the next target. To understand why we're standing on this ledge, you have to look at a decision made in a wood-paneled room back in 2010. After the 2008 crash, when the world's economy was literally melting into a puddle, Congress realized they couldn't trust the annual budget process to protect people like you. They knew that if the big banks could lobby Congress to cut the watchdog's budget, the watchdog would eventually starve. So they did something brilliant and dangerous. They tucked the CFPB's funding inside the Federal Reserve. It was supposed to be a fortress, a perpetual motion machine of funding that no president could touch. But then enters Russell Vought. Now look at the pattern here. Vought isn't some mustache-twirling villain from a cartoon. He's much more effective than that. He's a bureaucratic surgeon. He's the guy who ran the OMB, the guy who knows where every single tripwire is buried in the federal code. He didn't try to pass a law to kill the CFPB. He knew he'd lose that fight. Instead, he went into the basement of the Dodd-Frank Act with a magnifying glass and found a single phrase: combined earnings.
For 14 years, that phrase was interpreted as gross income. Basically, as long as the Fed was bringing in money, the CFPB got its slice. Simple, right? But Vought, he waited for the perfect storm. You see, since late 2022, the Fed has actually been running at a technical loss. Why? Because they're paying out massive interest to big banks on their reserves, while the bonds they hold from the pandemic era are paying almost nothing. It's an accounting quirk, a temporary red ink line on a $1 trillion balance sheet. Vought saw his opening and pounced. He's now arguing, with a straight face, that earnings doesn't mean revenue, it means profit. And since the Fed isn't profitable right now, he's claiming he has no legal authority to ask for the money. It's a manufactured crisis. He's using the Fed's temporary math problem as a guillotine for the entire agency. The mainstream articles will tell you this is about fiscal responsibility or legal clarity. That is a lie. If it were about the law, they wouldn't have waited until 9 days before the money ran out to make this move. This is a hostage situation. And look who's left holding the bag. I was looking at line 45 of the Oregon filing. It's not just about complaints. The CFPB is the only entity that publishes the average prime offer rate tables. You probably don't know what that is, but every mortgage lender in America uses it to determine if a loan is predatory or not. If those tables aren't updated in January because the staff has been furloughed, the entire $13 trillion mortgage market effectively hits a wall. Lenders won't know how to price loans without breaking the law. They'll just stop.
The AGs like Letitia James and Rob Bonta, they aren't just liberal crusaders here. They're looking at the price of copper, the 10-year yield, and the massive spike in credit card delinquencies, which are at a 10-year high, by the way. And they're realizing that if the CFPB vanishes, the states will be left trying to put out a forest fire with a garden hose. Vought isn't panicked, he's calm. He's counting on the fact that you don't understand the difference between revenue and net earnings. He's counting on the fact that the Supreme Court's previous ruling on CFPB funding didn't specifically define what happens when the Fed is in the red. He's found the one crack in the fortress, and he's currently pouring the concrete in. Do you see it yet? They aren't trying to fix the agency. They're trying to delete the database. They're trying to wipe the slate clean for the debt collectors and the payday lenders before the 2026 cycle even begins. And while everyone's arguing about accounting, the actual mechanism of your protection is being dismantled bolt by bolt. I know, it sounds like some boring budget dispute, but when you realize that Vought has already ordered a pencils-down directive for all active investigations, we're talking 46,000 active fraud cases that are just sitting there. You realize the villain isn't the guy who breaks the door down, it's the guy who quietly changes the locks and walks away with the only key. Think of the financial system like a high-stakes late-night bar. You're in there just trying to have a drink and mind your own business. The CFPB, they're the bouncers. They're not there to tell you how to spend your money. They're only there to make sure the guys in the back don't slip something into your drink or pick your pocket while you're looking at the jukebox.
Now imagine the bar owner, let's call him Vought, walks up to the lead bouncer and says, "Hey, the bar didn't make a profit on the buffalo wings tonight, so I'm not paying you. In fact, you're fired, and I'm taking your radio and your flashlight. Good luck with the crowd." The rowdy guys in the corner? The payday lenders, the predatory debt collectors, the ones who make their living on errors in your credit report. They see the bouncer being dragged out the door. They see the radio, the national complaint database, going silent, and they start grinning. They aren't just going to keep doing what they were doing, they're going to turn the place upside down. Because they know that for the first time in 15 years, there is no one left to stop the fight. That is exactly what this earnings trap is doing to your bank account. It's not just a budget cut, it's the removal of the only person in the room with a badge. You see, the system is stuck in a classic empathy trap. If you talk to the people at the Fed, they'll tell you they're technically trapped. They have to pay high interest to the big banks to keep the economy from spinning out of control. But they're stuck holding all these old pandemic-era bonds that pay next to nothing. They're bleeding cash. If they pivot and just give the CFPB money, Vought and his team will hit them with the Anti-Deficiency Act, a law that carries actual jail time for federal employees who spend money that hasn't been appropriated. On the other side, if they don't fund the Bureau, the entire consumer economy hits a brick wall. They are paralyzed. They're staring at each other in a standoff while the fuse is burning down to the new year.
I know. Listening to this, it sounds like some dark dystopian fiction, like it couldn't possibly happen in the most advanced financial system on Earth. But look at the domino effect that's already starting to tip. It starts with the APOR, the average prime offer rate. I mentioned it before, but you need to understand the mechanics. It's a weekly table the CFPB publishes. Every legitimate mortgage lender in the country must use it to prove their loans are qualified mortgages. If a loan is a QM, the bank is protected. If it's not, it's considered high risk or predatory. If the CFPB shuts down in 9 days, those tables stop. Think about that. If you're in the middle of buying a house in January and your lender can't verify the APOR because the website is down and the economists who calculate it are sitting at home in their pajamas, the lender doesn't just wing it. They stop. They freeze the closing. They can't risk the billion-dollar lawsuits that come with issuing a non-qualified mortgage. We are talking about a $13 trillion industry that relies on a weekly Excel sheet, and the guy with the password just got locked out. Then comes the second domino, credit reporting. In 2024 alone, the CFPB handled over 2.7 million complaints about credit reports. Think about how many times you've seen a medical debt error or a zombie debt from 10 years ago suddenly pop up on your Experian file. Right now, when that happens, you file a complaint and the CFPB system forces the company to respond. It has a 99% response rate. Why? Because the companies are terrified of the watchdog seeing their data. In 9 days, that 99% response rate becomes 0.
If a scammer steals your identity in January and the credit bureau tells you to prove it, you have no leverage. You can't escalate it to the feds. You're just another voice shouting into the void. The companies know this. They've already started scaling back their compliance teams in anticipation. Why pay for a team to fix errors when there's no one to find you for making them? The third domino is the scammer paradise. The CFPB currently has over 46,000 active investigations. These aren't just vague ideas. These are specific cases of companies illegally seizing cars, charging junk fees on student loans, and draining the bank accounts of veterans. When the funding hits 0, those cases don't just slow down, they stop. Statutes of limitations keep ticking, but the investigators aren't allowed to log into their computers. It's a literal get-out-of-jail-free card for every predatory lender in America. It leads from a funding cut to a furlough to a technical freeze in lending to a total explosion in consumer fraud. It's inevitable. It's math. And the worst part? The people who built this trap know exactly how the dominoes are going to fall. They aren't trying to save money, they're trying to burn the ledger. Do you see the sequence now? It's not a bar fight, it's a demolition. And your savings are the foundation they're currently drilling into. You still with me? Because we need to talk about what happens when the dust settles in 2026. The ugly truth? Even if that court in Oregon drops a temporary restraining order tomorrow, the damage is already done. The pencils down culture is baked into the agency now. Over the next 6 months, you're going to see a two-tiered America emerge. If you live in one of those 22 states suing the administration, places like New York, California, or New Jersey, your AG is going to try to build a local firewall. They'll try to spin up their own initiatives.
Mini watchdogs. But if you're in a state that didn't sign that filing, you are effectively on your own. You are living in a regulatory desert where the rule of law is whatever the bank says it is that morning. I've been looking at the projections for where this leads by 2030, and it's a vision of credit as a privilege. Imagine walking into your bank in 5 years and realize that the concept of a dispute doesn't exist anymore. Without a federal agency to mandate transparency, the watchdog is replaced by a black box AI algorithm. If the machine says you owe money, you owe it. There's no human at the CFPB to audit the code. There's no complaint database to prove that 10,000 other people are having the same glitch. The middle-class financial shield, the one that was built to stop a 2008, will be a ghost story we tell our kids. So what do you actually do? You need to stop acting like the system is coming to save you. It's not. First, you need to move your primary life funds to a local credit union. Why? Because credit unions are owned by the members, not shareholders. When the national blackout hits in January and the big banks start testing the limits of junk fees, a credit union is less likely to gamble with your trust. They're not looking at Vought's funding freeze as an opportunity to fleece you. They're looking at it as a risk to their own community.
Second, you need to start a physical audit trail. I know it sounds primitive, but if the national database goes dark, your digital records are only as good as the bank's willingness to show them to you. Download every statement. Print the qualified mortgage disclosures on your house. If you have a dispute with a debt collector, send everything via certified mail, paper and ink. In a world where the federal digital watchdog is starved to death, the person with the physical receipt is the only one who can win in a local court. Third, mental fortitude. They are counting on the fact that this is too boring and too accounting heavy for you to care. Don't let them. When you see your mortgage rates fluctuate or a maintenance fee suddenly appear on your account in February, don't just sigh and pay it. Call your state AG's office. Even if the CFPB is shuttered, the states are currently building guerrilla enforcement teams. They need your data to fight the war that Vought thinks he's already won. It's a lot to take in, I know. We spent 15 years thinking we had a bouncer at the door, only to find out the owner was planning to burn the bar down for the insurance money the whole time. This isn't just about a budget, it's about who owns the data of your life. In 9 days, the shield drops. Whether you're standing in the rain or under a roof depends entirely on the moves you make before the calendar turns. Watch the hands, not the mouth. The mouth talks about combined earnings, but the hands are busy emptying the room. I'll see you in the comments.